So, are we going into recession? Well, according to the data I'm looking at here on the Fed economic data from St. Louis Federal Reserve, inflation is at all-time highs. Basically, consumer index says that things are always going to cost more than they did in the past. Right now, they cost more than ever. Of course, they always go up, but the inflation rate, that it is doing, it's happening faster. So when we see the consumer price index, which is just like, how much a piece of candy costs relative to all the years prior, it's higher, always higher, every year it's higher, but the rate at which it is changing is faster and higher than any other years. So we can see the graph right here that in the last couple of years or last year, it did, instead of just being like kind of linear, it's more like this. So prices are increasing faster than they should or than they want them to. This is kind of good for some businesses. This is kind of good for some people that have debt that are allocated to a business. If you have bad debt, for example, credit card debt, this might not be necessarily good. Actually, it doesn't really matter unless that debt or that increase in inflation causes businesses to struggle to increase prices. Therefore, they struggle to also pay for expenses that are going higher. When they struggle to pay for expenses, they struggle to pay you, and they might cut people off. Might lay some people off, and with less people having jobs, then it's kind of bad. With that, we also see the unemployment rate. It's pretty much back to how it was. So that's one of the biggest factors when it comes to like recession is unemployment rate. Unemployment rate is important because if there's no jobs and there's no people with money, then there's not going to be people buying stuff, and businesses are not going to have money to support their businesses, and that's when things start to go downhill. So that everything's interconnected. Right now, unemployment rate seems back to normal. Also, something I want to show you, and it's kind of important, is houses are starting to become kind of available than how they were before. So people are starting to sell houses. A little bit after the pandemic, they were hard to find houses for sale, but I think it's picking up right now that like interest rates are planning to increase. Let's see if I can find. So right here we have federal funds effective rate. So this is the interest rates. It has been very low since 2007 or so. It dropped in what year was this? They have been kind of low since 2007. Yes, they've been like dropping, and then recently, since 2016, they've been going up, and then the market has been kind of volatile and stuff. And then once they started dropping rates, stocks started going up in 2019, 2018, and then 2020. The stocks dropped dramatically, but because just the fear, right? Like just out of fear, they dropped like it was almost like a 1 month span where it just dropped. I think it was almost, some stocks dropped like 50%, up to 50%. Some dropped more, some dropped only like 20%. And that was a buying opportunity because of all the announcements of governments printing money and giving it out to people and basically bailing out everybody from this pandemic, which was going to cause a slowdown in the economy. So instead of slowing down the economy, they pump up the economy with free money, and that free money led to the inflation. And now that the inflation is out of control, they're trying to raise interest rates again to decrease inflation. It might kind of slow down inflation, but at the end of the day, it might also scare people into having a volatile market. Economic growth might slow down, and then people might start seeing job losses with an economic slowdown, because businesses are not able to borrow money at a cheap rate or a cheap interest rate, so it kind of decreases growth. And that's why a lot of the technology companies, a lot of startups, their stocks have been plummeting, because those companies depend on borrowing lots of money and accumulating lots of debt to grow their business, in hopes that the consumer catches on and it gets traction and the company starts to expand and generate revenue with more people knowing about it. They spend on advertisements, they spend on new factories, if it's factories. A lot of it is advertisement, and more employees and new projects. And a lot of the projects they start cost a lot of money, and sometimes those projects are just a waste of money and nothing happens with those projects. For example, I think CNN had launched a streaming software or a streaming platform, and then they just got rid of it because it was a big loss. I don't know the exact numbers, but millions of dollars were lost, and they decided to give up on it. And I can imagine a lot of companies are giving up on projects that were funded by borrowed money. And so these projects hire people. With these projects not occurring, or some projects being left behind, people are going to be losing jobs, and they're going to have to shift over to other jobs. But the job market seems strong right now, as it is reported, and we'll see what happens with interest rates. But right now, stocks are low. I'm not saying to buy or not to buy. This is completely up to you. But if we see that the interest rates are kind of making people not want stocks, there'll be a period where it's just kind of like sideways. And then for tech stocks, a lot of value stocks right now are pretty good. They're going high. And the government, the Federal Reserve, will be like, hey, let's lower interest rates again, so that it's easier to borrow money, and we start this cycle all over again of tech stocks going up. And before that happens, I personally might buy some stocks. What are some other things I got right here? Delinquency rate on credit cards doesn't seem like anything right now yet. This all reported on a monthly basis. This is total public debt, always going higher. 7-year break-even inflation rate, it's going up. Consumer price index going up. Inflation, consumer prices in the United States going up. Medium sale price of houses sold for the United States, it's always going to be going up. There's going to be times where it kind of slows down, and lately it's just been going crazy up. But with interest rates increasing again, it plays a huge role in the housing market. And before interest rates get too high, people are going to want to sell, because they are scared that if they're too high, they're going to struggle to sell their home, and it's going to take too long to sell their home, because there's not going to be enough buyers. But there's probably always going to be enough buyers. Money is pretty much, if you think about it, pretty unlimited because of credit, and money's out there, and people are going to borrow money to buy the stuff they want. And here we have, it is a yield curve. So when we see that the interest is pretty high for short-term loans, then that shows that a lot of people are taking into account risk. It's like a 30-year loan is pretty low. It's all right interest. If you do a very short-term loan, it should be even lower interest. because because you don't have to deal with inflation, or the bank doesn't have to wait as long for the loan to come back to them. 1 year, you just gotta wait 1 year, as opposed to 30 years. Anything can happen in 30 years. So you could lose money. For a lender could lose money in 30 years if inflation goes sky high. So if short-term loans are going up in interest, that just shows that the banks are unsure of what's going to happen in the short term. So they're not that confident with what's going to happen. We also have, I think, consumer confidence. Where is that at? Yeah, it's right here. Consumer sentiment. Right now, the sentiment is low. A lot of people are just unsure of the markets right now. I think it's mostly because of the tech stocks have been dropping. We see anywhere from 35% drop. I think 35% Amazon has dropped. 70% I think Shopify has dropped. Nvidia, I think like 40-ish percent. Robinhood has dropped like 70%. So there's stocks out there that seem like quality stocks, but they have dropped quite dramatically. That's basically all I have for today, and take all this with a grain of salt, and I hope you enjoy this video. See you guys. Bye bye.